Based on anybody for anybody interested in investing in my provide me financial compensation investing in my movie trilogy. This is my strategy. This is my email.
Tokenized movie trilogy financing strategy. Investor presentation format. Executive summary. Investment thesis. Tokenize a movie trilogy's intellectual property IP rights as real-world assets RWAs on blockchain, enabling fractional ownership, improved liquidity, and transparent revenue distribution, transforming film financing from high-risk single bets into structured, diversified asset allocation. Key value proposition. Films are not single binary bets but bundles of monetizable rights, theatrical, streaming, music, international distribution, each with its own revenue profile. Tokenization organizes, standardizes, and distributes this value efficiently. 1. The opportunity. Why tokenize film IP? The problem with traditional film financing. Opaque, relationship-driven deal-making. Investors have limited visibility into downstream revenues. Concentrated risk on single titles. Returns difficult to track and verify. The solution, rights-backed tokenization. Treat film IP as a financial asset class. Fractionalize exposure to allow broader participation. Unlock value earlier, once revenue pathways are visible through distribution agreements and pre-sales. Create transparent, auditable revenue tracking on chain. 2. Asset structure, the tokenization framework. What we tokenize. Asset class monetization stream token representation. Theatrical rights box office revenue sharing income rights tokens. Streaming rights platform licensing fees royalty tokens. Music rights sync licensing, streaming music IP tokens. International distribution territory specific deals distribution rights tokens. Derivative rights remakes, sequels, merchandise IP derivative tokens. Reference, industry models show rights-backed investing where IP rights serve as primary collateral and return generation mechanism. Token economics. Security token offering STO, structure, compliant with securities regulations. Tokens represent fractional ownership of specific revenue streams. Smart contracts automate distribution payments. Secondary market trading provides liquidity. 3. Trilogy-specific advantages. Built-in risk mitigation. Slate financing approach. Spread capital across 3 interconnected films. Diversified revenue pools. Each film has different release windows, territories, and monetization timelines. Sequential learning. Apply distribution insights from film 1 to films 2 and 3. Synergistic IP value. Trilogy creates franchise value greater than sum of individual films. Audience retention across releases. Bundled licensing opportunities all 3 films as package. 4. Timeline and capital deployment. Phase token issuance and milestone linked deployment. Phase event capital release token activity. Phase 1 IP packaging and pre-sales agreements 15% initial token issuance film 1. Phase 2 film 1 production start 25% first milestone release. Phase 3 film 1 completion 20% secondary token offering film 2. Phase 4 film 1 release 20% first distribution payouts via smart contracts. Phase 5 film 2 to 3 production 20% full trilogy token suite live. Governance controls. Independent administration with transparent reporting frameworks. Chain of title verification, legal due diligence tracing unbroken IP ownership. Legal due diligence, financial assessment, and milestone linked deployment. 5. Investor benefits. Diversification. Access to multiple revenue streams, not just box office. Professional portfolio management without film industry expertise. Portfolio diversification across languages, genres, and formats. Transparency and governance. On-chain tracking of funding milestones and ownership records. Real-time revenue visibility. Automated royalty distribution via smart contracts. Liquidity. Secondary market trading of tokenized positions. Ability to exit before theatrical release. Fractional minimums, lower entry barrier than traditional film funds. Early mover advantage. Participation in emerging asset class. Potential for premium returns as institutional money enters the space. 6. Market validation. Industry momentum. Cine now 1,350 rupees core platform institutionalizing Indian film financing with tokenization layer, treating film IP as rights-backed financial assets. Mugafi plus Avalanche partnership, targeting $10 million plus initial IP financing, $1 billion plus annual target, backed by Netflix, Amazon, Panorama Studios. Mutual Capital Holdings, BlackRock and Marvel Studios backed RWA tokenization platform for entertainment IP across film, music, and digital ecosystems. BOAA Riza Asset launching regulated platform for tokenizing music copyrights and media IP with V3 investment. 7. Risk mitigation framework. Risk mitigation strategy. Token liquidity risk secondary market partnerships, buyback mechanisms. Regulatory uncertainty STO structure, legal compliance, licensed jurisdictions. Film underperformance trilogy slate diversification, pre-sales commitments. Rights disputes chain of title verification, legal governance. Technology failure enterprise grade blockchain, audit protocols. 8. Proposed capital structure. Component allocation. Production budget 3 films 65%. Marketing and distribution 15%. Token platform development 5%. Legal and compliance reserve 5%. Investor reserve contingency 10%. Token allocation. 60% public offering. 20% production team vested. 10% strategic partners. 10% liquidity reserve. 9. Exit and return strategy. Primary returns. Revenue distributions via smart contracts from theatrical, music, and international rights. Token appreciation in secondary markets. Potential IP acquisition by major studio. Token holder rights. Pro rata share of designated revenue streams. Governance voting on certain creative distribution decisions DAO model. First access to derivative projects, sequels, merchandise, NFTs. 10. Next steps. 1. Legal structuring. Establish SPV, fund vehicle, BVI jurisdiction. 2. IP audit. Complete chain of title verification and rights packaging. 3. Pre-sale commitments. Secure distribution agreements to demonstrate revenue visibility. 4. Token platform selection. Avalanche, Ethereum, or Polygon based on scalability and RWA capabilities. 5. Compliance registration. Regulated token offering. Santo structure. 6. Investor roadshow. Pitch to institutional and qualified investors. This strategy positions your trilogy at the forefront of entertainment finance, transforming creative IP into a structured, transparent, and accessible asset class that benefits both creators and investors.
I'll be changing some of the details, work out more of the details later on. That's the basic overall strategy on me producing a 10-movie trilogy. Anybody that's interested in it, that's my email. Contact me on my email.